As we wrapped up the third full week of trading for 2026, let's recap a little bit about what has been moving markets this past week. We all know that this week, Greenland has been in the limelight quite a fair bit. But today, I'm not here to talk about Greenland. Instead, I want to talk about Iran. If you can recall, towards the end of 2025, there were widespread reports about protests within Iran as a result of the collapse in the local currency. Those protests have turned violent, which led to the Iranian regime clamping down on protesters, and there were unconfirmed reports of thousands of protesters being killed. President Trump has actually threatened to intervene militarily in Iran should the killing continues. That has resulted in volatility in energy prices, in particularly crude oil. So today I want to talk about crude oil in the Brent crude, the benchmark traded out of the Intercontinental Exchange. Now, what you're seeing in front of you here is the March delivery for Brent crude oil futures traded out of the Intercontinental Exchange, and this referencing the daily time frame. Here we can see that oil prices has been very depressed throughout 2025, and we have a bit of a rebound from the low of $58.72 towards the end of December, towards the end of 2025. But prices of crude oil since has been bouncing up higher, largely on the back of that threat of a military intervention in Iran by the United States. That has caused Brent crude oil to rally to $66.82. But the prices since has pulled back a little bit, and the low traded recently is at $63.27. So we can see clearly there is the possibility of continued recovery in the energy prices, in particularly crude oil. Here we can see that in 2025, the most immediate resistance to higher prices has been around $69.53 to $69.87. This will remain to be the natural target should oil prices recover. With the first area of resistance should be these two levels here. Okay, so by and large, I do think the case for continued recovery is definitely very much evident here, largely on the issue of possible attack by the United States against Iran. Here we take a look at the 4 hours time frame. So we can see the recovery from $58.72 is rather structured, and it has sustained for more than 5 weeks now. The high traded, like I mentioned earlier on, is $66.82 with a bit of a pullback, and now we can see prices are again looking to rally. Should this rally continues, the immediate resistance is the area where I just mentioned earlier on in the daily time frame at $69.53 to $69.87, with my projected target just underneath it at $69.33. So this lay the case for continued recovery in oil prices, because I believe the situation in Iran is still very volatile, with every risk that some kind of military options may be exercised by the United States against Iran. So that has been underpinning oil prices, and I believe this will be the catalyst if there's going to be continued recovery in oil prices. So this is my take, and I hope this has been useful to you. I shall see you in the next update. Bye-bye.